very small topic. It will be covered in 2 classes. Okay, now VAT is basically an indirect tax which will be paid by the final consumers.
Yeah, it's a sales tax, right?
Right, it is sales tax. So basically, yeah, so VAT is basically an indirect tax and it will be paid by the final consumers. Okay. Now, in VAT, we have few type of supplies. One is standard rated supply. So on standard rated supply, you have to pay 20% VAT. Okay. So we have standard rated supplies. So on standard rated supplies, you have to pay 20% VAT. Now some are reduced rated supplies. So on reduced rated supplies, you have to pay 5% VAT. While some are exempt supplies. So on exempt supplies, you will pay no VAT.
No.
And some are zero rated supplies.
Okay.
On which no VAT will apply. Okay. Now, so we have 4 type of supplies. One is standard rated supply. So on standard rated supply, you will pay 20% VAT. Then second one is reduced rated supply. So on reduced rated supply, you have to pay 5% VAT. Then third one is exempt supply. So on exempt supply, you will pay no VAT. Now I have given examples of exempt supplies. So that will include land, postal services, education, insurance, financial services, exports outside the European Union. So these are examples of exempt supplies. So on exempt supplies, you have to pay no VAT. Then fourth one is zero rated supply. So even on zero rated supply, you will pay no VAT. Now, basically, the students, they get confused. They say that if on both exempt supplies and zero rated supplies, if we have to pay no VAT, then why the name is different? So basically, there's a difference between exempt supplies and standard rated, exempt supplies and zero rated supplies. So before I tell you that difference, let us understand one small concept. Okay, then I will tell you the difference between these two.
Okay.
Now, basically, let me tell you how you will be computing your VAT. Now, VAT is calculated on both purchases and sales. Okay, it is calculated on both purchases and sales. Now, VAT which is computed on purchases, that is known as input VAT. Okay, the VAT that you will pay on your purchases. So that is basically known as input VAT. And the VAT which is computed on sales, that is known as output VAT. Okay, so this output VAT, this will be collected from the consumers. Okay, this input VAT is something that you have paid when you were purchasing the goods, your raw material. And when you will sell the goods, so you will be collecting output VAT from the consumers. And then you will go to HMRC and you have to pay that VAT to tax authorities. Okay. So basically you have to do one VAT calculation. You will take the output VAT, which you have collected from the consumers on behalf of tax authorities. Now, whatever input VAT you have paid on your purchases, all of that input VAT will be recovered. because ultimately VAT must be paid by the final consumers. Okay,
Yeah.
whatever input you have paid, that will be recovered. Okay, that taxation authorities, they will give back that input VAT to you. Okay, so you will make an adjustment from this output VAT, you will minus input VAT. So either there will be a VAT payable or VAT refundable.
Mm-hmm.
Because let's say, for example, you have collected an output VAT of £10 from consumers, but on your purchases you have paid an input VAT of, let's say, £5. So obviously
Mm-hmm.
it can't be this way that first of all you will go to the tax authorities, you will give that £10 to them, and then again you will go to them and you will ask them to pay the £5 that you have paid on your purchases, right? That can't be the case. So they say that we will go for net settlement. Okay, so you have collected £10 from consumers, but
Mm-hmm.
on your purchases you have paid VAT of £5, right? So now you will
Right.
make an adjustment over here. So it means you have to pay £5 VAT to tax authorities. This is the net amount that you have to pay to tax authorities.
Mm-hmm.
But over here, they can also be a VAT refundable. Maybe let's say
Yeah.
you have collected a VAT of £15 from the consumers, but on your purchases you have paid VAT of £20.
Yeah.
So this time the tax authorities, they will pay you back £5, right? That will be
Right.
negative. Clear?
Yes, ma'am.
So that is how you have to calculate your VAT. Okay, you will take output VAT minus input VAT. So either there will be a VAT payable or VAT refundable.
Okay.
Okay, now coming back to the exempt supplies and zero rated supplies. Okay, now on exempt supplies, you have to pay no VAT. Okay, that is no
Yeah.
output VAT and no input VAT will be recovered. Okay, you will not charge any output VAT from the consumers.
Okay.
Okay, and secondly, whatever input you have paid on your purchases, that input VAT cannot be recovered. Okay,
Sorry, ma'am.
so no output and no input.
Mm-hmm. Okay.
Now zero rated supplies. On zero rated supplies, when you will sell the goods to the consumers, so you will not charge any VAT. Okay, the output VAT will be zero.
Okay.
But whatever VAT you have paid on your purchases, whatever input VAT you have paid on your purchases, all of that input VAT can be recovered. So that is the
Okay.
difference. Okay, so on exempt supplies, no output VAT and no input VAT. No
Input.
input can be recovered. However, on zero rated supplies, when I will sell the products to the consumer, so I will charge no output.
Mm-hmm.
But whatever input VAT I have paid on my purchases, all of that input VAT will be recovered.
Okay.
Okay, that will be recovered. So that is the difference. Clear?
Yes, ma'am.
If you want, you can note down these points.
Yes. Okay. Done, ma'am.
Okay. Okay, now for calculating VAT amount, you will be given with uh, two types of data. One is exclusive of VAT. You can use the term exclusive of VAT,
Mm-hmm.
and the other term is inclusive of VAT. Okay, now exclusive of VAT means that VAT is not included.
Mm-hmm.
Okay,
Okay.
so if you want to compute the amount of VAT, so you will be taking the amount into 20%.
Okay.
Okay, because in that amount VAT is not included. So you will take the amount 20%. But if it is inclusive of VAT means that VAT is already included in the amount. So from that amount, I need to take out the amount of VAT.
Mm-hmm.
You will take amount into 20 divided by 120.
120.
Okay, now there is no concept of by default. That is, you can't say that any amount is by default a VAT inclusive amount or VAT exclusive amount. So it will be mentioned in the question whether it is VAT inclusive amount or VAT exclusive amount. Okay, that will be mentioned. But let's say if it is not mentioned, then you will assume that it is VAT exclusive amount.
Exclusive. Yeah.
Okay.
Yeah.
Let's say for example, sales are 200,000 pound, and this is inclusive of VAT.
Mm-hmm.
Purchases are 80,000 pound, and it is exclusive of VAT. Now you have to calculate the amount of VAT payable. Okay, now for computing VAT payable, you will take output VAT minus input VAT.
Right.
So VAT which is paid on sales, that is known as output VAT, right?
Mm-hmm.
So output VAT. So sales are 2 lakh, right? And it says this
Yes.
is inclusive of VAT. So
Right.
so it means in this amount, VAT is already included, right? In this 200,000, VAT is already included. So I just need to compute
Right.
the amount of VAT, right? So you will take
Mm-hmm.
amount 200,000 into 20 divided by 120. So that is
120.
going to be
3333.
okay. Now from this output VAT, you have to minus input VAT.
16,000.
It is paid on purchases, that is known as input VAT, right? So
Mm-hmm.
purchases, those are worth 80,000, but it says this is
Yeah.
exclusive of VAT. So again, I need to compute the amount of input VAT, right? So since it is
Right.
exclusive of VAT, so you will take the amount 80,000 into 20%.
20%.
That will be 16,000.
Yeah.
So there will be a VAT payable of
17,333.
right. Okay.
Yes, ma'am. Yes, ma'am.
Okay, now just look over here. Text point. Now text point. means at what point output VAT should be charged. Okay. So in text point, we are trying to determine that at what time your output VAT should be charged. Now, basically, over here it says that so basically over here we have basic text point. Now, basic text point is where you have delivered the goods to consumers or I have rendered the services. So
Okay.
according to basic text point, it says that VAT should be charged when goods are delivered to the consumers or services are rendered. Okay, it says that is the point on which VAT should be charged when you have delivered the goods to the consumers or when you have
Mm-hmm.
rendered the services to them. Okay, because like let's take an example of gold. Like if you go and if you just let's say if you make a gold jewelry. So
Mm-hmm.
basically, the prices keeps on fluctuating, right? Like today
Yeah.
the price is different, tomorrow it will be different. So let's say
Yeah.
today if I order some jewelry, so obviously it will take some time, right? So it will take some time for getting ready. So let's say I
Mm-hmm.
have placed an order today. So they told me that they will deliver the jewelry after, let's say, 10 days. So obviously
Mm-hmm.
within 10 days, the prices will, they will be changed, right? So the question is
Yes.
at what point VAT should be charged?
Mm-hmm.
Now there's a problem, right? Like today's rate will be different. And when I will go after 10 days to collect the jewelry, the rates will be different.
Yeah.
So the question is
Yeah.
when the VAT should be applied. So basic text point says that VAT should be applied when goods are delivered. Okay, that is after 10 days. They should apply the VAT amount. Okay, so they can't apply VAT on the date of like taking the order. Okay, so they will apply VAT on the date when goods are delivered.
Okay.
Okay, clear?
Yes, ma'am.
Okay, so one is basic text point. Now the other one is actual text point. Okay.
Okay.
Now sometimes you can receive cash in advance, right?
Mm-hmm.
So even before delivering the goods, consumers they have made the payment. That is
Yeah.
possible, right? They can take the cash in advance.
Mm-hmm.
So now you can say that when uh, so now over here you can't say that when goods will be dispatched, then we will charge the VAT. No. So basically, you will receive the cash in advance, right? So that
Yeah.
will become the actual text point because you have received the cash in advance. So that is your actual text point, and that is when you should charge the VAT.
Okay.
Okay, so although goods are not delivered, but you have received the cash,
Mm-hmm.
so that will become your actual text point, and that is when you should charge the amount of VAT.
Okay.
Okay, clear?
Mm. Yes, ma'am.
Okay, now just look over here. It says VAT is normally accounted for on quarterly basis. So it is important to know the time of supply to identify the quarter in which it will fall. Okay, so we have to
Okay.
pay VAT on quarterly basis. Okay,
Okay.
so it says text point or time of supply determine when output VAT will be due. The basic text point is the date goods are made available to the consumers or service is completed.
Vendor. Yeah.
That is basic text point. Then it says if the invoice is issued or payment received before the basic text point, then this becomes the actual text point. Like I was giving an example, right? That you have received the cash in advance. So that will become
Mm-hmm.
your actual text point, and that is when you should charge the amount of that.
Okay.
Okay. Okay, then it says if an invoice is issued within 14 days of the basic text point, the invoice date will become the actual text point. Okay. Okay, now let's say I have delivered the goods on 10th Jan. Okay. But after delivering the goods, I have to send the invoice within 14 days.
Okay.
Okay, so in case of goods, basic text point is when goods are delivered, right?
Yeah.
But from the basic text point, that is when goods are delivered. So if your invoice is issued within 14 days, then output VAT will apply on the day when invoice is issued. Okay,
Okay.
so although according to basic text point, VAT should be charged when goods are delivered. But over
Delivered.
here they
Yeah.
say that if after delivering the goods, if invoice is issued within 14 days, then
Okay.
VAT should be applied on the date of invoice. Okay,
Okay.
the date when invoice is issued. Now this can have an impact on your calculation. For example,
Mm-hmm.
let's say my quarter is March, June, September, and December. That is my quarter: March, June, September, and December.
Okay.
So let's say although the goods are delivered on 31st of March, but that invoice is issued on an invoice is issued on, let's say, 5th of April. So now
Mm-hmm.
output VAT will apply on 5th of April. So that will fall in the quarter of June. Okay, so although you can see the
Okay.
goods are delivered in a different quarter, and
Mm-hmm.
you have to apply the VAT on a different quarter. That is in the quarter of June. Okay, so this
Yeah.
have an impact on your calculation.
Mm-hmm. Okay.
Okay, exception. So it says goods supplied on sale or return are treated as supplied on the earlier of adoption by the customers or 12 months after dispatch. Okay. Now sometimes goods are given on return basis. So either the goods will be accepted, it will not be returned. So
Mm-hmm.
if the goods are accepted, so output VAT will be charged.
Okay.
Or let's say 12 months have passed from the date of sale. So the rule
Okay.
says that 12 months have passed from the date of sales. So now you should charge your output. You should start charging the output VAT.
Okay.
Okay, then it says continuous supply of services paid for periodically, normally have text point on the earlier of receipt of each payment and the issue of each VAT invoice. Unless one invoice covering several payments is issued in advance for up to a year. The text point is then the earlier of each due date or date of actual payment. However, for connected businesses, the text point will be created periodically, in most cases based on 12 months period. Now there are some continuous supply, like let's talk about some K Electric. Okay, so they charge VAT in the bills, right? In the electricity bills. So basically, VAT is not charged on daily basis, right? Although the supply
Okay.
is given on continuous basis, right? On daily basis, we consume
Mm-hmm.
electricity on daily basis. But VAT is not charged on daily basis. It is applied
Okay.
on monthly basis.
Mm-hmm.
Okay, so in your bill, they will charge you
So.
VAT.
Mm-hmm.
So in continuous supply, you have to remember one thing, that is when you will receive the invoice, so VAT will be charged on it. Okay, so although they are giving you the
VAT
services on a
will
daily
be
basis.
Give me any example to make it more clear.
Like I was talking about electricity. We consume the electricity on daily basis.
Yeah.
We are receiving the services on a daily basis. But they are
Right.
not charging the VAT on daily basis, right? Like they don't
Right.
come at the end of each day and ask you to pay the amount of VAT, right? But they will take the VAT at the end of the month when you will receive
Right.
the bills, right? So that is an example of continuous supply. So for
Okay.
in case if you're receiving continuous supplies of services, so VAT will be charged when you will receive the invoice.
Okay.
Clear?
Yes, ma'am.
Okay, now next we have VAT registration. Okay, now basically there are some restrictions.
Okay.
Let's say if your turnover for 12 months exceeds £85,000, then you have
Mm-hmm.
to register for VAT. Okay, so if your sales exceed £85,000, then you have to
Mm-hmm.
register for VAT. You have to compulsory register for VAT. Okay, I'm talking about sales of
Okay.
last 12 months. Okay, so
Mm-hmm.
if
Right.
last 12 months sales exceeds £85,000, then you have to compulsory register for
Mm-hmm.
VAT.
Okay.
Now the question is that if the sale is less than £85,000, so can I still register for VAT? The answer is yes,
Mm-hmm.
and that is known as voluntary registration. Okay, so even if your turnover is less than £85,000, so still you can register for VAT, and that is known as voluntary registration.
Okay.
Okay, now the question is what are the benefits of voluntary registration? Why would anyone go and voluntarily register for VAT?
Mm-hmm.
Now, firstly, you can disguise the small size of business, right?
Okay.
Because, like if your business is VAT registered,
Mm-hmm.
so if some XYZ person, if they come and ask you whether your business is VAT registered or not, so if I say yes, my business is VAT registered, so the
Mm-hmm.
first thing that will come in their mind is that this business turnover is more than £85,000. This is the first
Right.
thing that will come in their mind, that this business
Yeah.
turnover is more than £85,000. So this way, you can
Mm-hmm.
disguise the small size of the business. So although your turnover was less than 85, but still you have
Mm-hmm.
voluntarily registered for VAT, right? So I
Mm-hmm.
can disguise the small size of my business.
Oh,
Okay.
yeah.
So that is the first advantage. Now, secondly, if if at any time in the future, if your turnover exceeds £85,000, then VAT registration will become compulsory, right?
Mm-hmm.
So let's say my business turnover have exceeded £85,000, but still I have not informed tax authorities. So
Mm-hmm.
if the tax authorities comes to know about this, so now they will start charging penalties. Okay, they will charge a penalty on your business. They will charge some interest on your business.
Mm-hmm.
Okay, because sooner or later they will get to know about it. Okay,
Okay.
so if you don't inform them, so whenever they will come to know, so obviously you have to register for that. Then secondly, they will be charging some interest and penalties.
Okay.
So there is one more benefit of voluntary registration, that is you can avoid late penalties because you already registered for that, right?
Mm-hmm.
So even in the future, if I like crossed a limit, so still I can avoid the late penalties. because I'm already registered.
Okay.
Okay, that is the second benefit. Now the third one is that you can recover all your input VAT. Okay, the input VAT that you have paid on your purchases, all of that input VAT can be recovered.
Okay.
Okay, so only VAT registered businesses can recover the input VAT. Okay,
Okay.
that is only for VAT registered businesses. So all the businesses can't recover. So only those businesses who are VAT registered, they can recover the input VAT on purchases.
Okay.
Okay, so there are three type of advantages. Number one, you can disguise a small size of business. Number two, you can avoid late penalties. And number three, you can recover the input VAT on purchases.
Okay.
Now there are few disadvantages as well. Now first of all, it will increase the burden of VAT administration.
Yeah.
You will be required to collect output VAT from the consumers. So that will
Right.
be your duty, right? That you have to collect the output VAT from the consumers, and you have to.
Right.
So it will increase the burden of VAT administration. Okay, so right now, although
Mm-hmm.
it is very easy to say that you have to collect output VAT, but practically it is very difficult. Okay.
Mm-hmm.
Plus, you have to submit your VAT returns on quarterly basis. Okay,
Okay.
so all of these things will increase your VAT administration.
Yeah.
Then most importantly, your product will become more expensive because in
Mm-hmm.
your sales price you will add the amount of VAT. Yeah, you will add the
Mm-hmm.
amount of sales tax, right? So your product will become expensive. Now it is
Mm-hmm.
possible that your competitor is not registered, right? That is quite
Right.
possible. That my competitor he is not VAT registered.
Mm-hmm.
So due to VAT registration, your price will automatically increase. So
Mm-hmm.
customers they might switch to the competitor.
Right.
Okay, clear?
Yes.
So it says compulsory registration, historic test. So taxable supplies in last 12 months or since business commence if shorter exceeds £85,000. Okay. Now taxable supplies that means your standard rated supplies and zero rated supply. Okay. So whenever we use the term taxable supply, that means standard rated supplies plus zero rated supplies. Okay. So if it exceeds £85,000, then you have to compulsory register for that. So it says HMRC must be informed within 30 days after the end of the month in which taxable supply exceeds £85,000 by completing Form VAT1 or using HMRC online services. So you have a time period of 30 days. So let's say I'm standing in the month of January. So you have to look at last 12 months turnover, right? So let's say in the month of
Mm-hmm.
January, I came to know that the previous 12 months turnover have exceeded £85,000.
Yeah.
Now you have to inform HMRC within 30 days. Okay, that is you have to inform them by 30th of June
Mm-hmm.
that your civil supply have exceeded £85,000. Okay, so you have to inform
Right.
them within 30 days. So it says the trader will be registered for VAT from next day of 30-day notification period. So I will inform them by 30th of January and from the next day I will be VAT registered. That is by 31st of January you will be VAT registered.
Mm-hmm.
Okay, then next it says VAT registration is not required if taxable supplies in the following 12 months will not exceed 83,000 pound. Now, if you can prove to HMRC that in the next 12 months, following means
Mm-hmm.
next 12 months,
Yeah.
in the next 12 months, if your turnover will not exceed 83,000 pound, then VAT
Mm-hmm.
registration is not compulsory on your business. But you have to prove this thing to them. Okay, like you have to show the your budgeting, your forecast to them that in the next 12 months my turnover will not exceed 83,000 pounds. So now this way you can
Yeah,
avoid
like
registration.
that has been exceeded in the previous 12 months, right?
Yes, but you told him that in the next 12 months your
Mm-hmm.
turnover will not exceed 83. Okay, so now registration will not be compulsory on you. Like, it is not required. So over here, we have in compulsory registration, we have two type of tests. One is historic test, where we were looking at last 12 months turnover. Now the second one is future test. So in the future test, if you think that in the next 30 days, your turnover will exceed 85,000 pounds, then you have to compulsory register for that. Like let's say I'm standing uh, like at today's 1st of Jan, assuming. Okay,
Mm-hmm.
so I think that in the next 30 days, my turnover will exceed 85,000 pounds. So
Yeah.
again, your registration will become compulsory on the basis of future tests.
Okay.
Okay. It says notify HMRC before the end of 10 days period or 30 days period.
Mm-hmm.
So you have to inform them before the end of 30-day period. And registration will be effective from start of 30-day period.
Okay.
So that was all about compulsory registration. So that must be on your fingertips. Okay.
Mm-hmm.
Next one is voluntary registration that I have already discussed with you. Okay, so although your turnover have not exceeded 85,000 pounds, but still if you want you can register for that because there are a few advantages. So
Mm-hmm.
you have to learn the advantages and disadvantages. Okay.
Yeah.
Okay, now VAT registration that is not only for sole traders, but it also applies on companies.
Mm-hmm.
So even if a company wants, they can also register for VAT. So, but they have to fulfill the criteria of compulsory VAT registration. Okay.
Okay.
Another question is what about group companies? Like there is one parent company and it has
Mm-hmm.
number of subsidiary companies.
Subsidiaries. Yeah.
Okay. So, in case of group companies, if you want, you can register the whole group instead of registering each company separately.
Okay.
Okay, so you can register the whole group instead of registering each and every single company.
Mm-hmm.
Okay, now basically if whole group is registered for VAT, then all the within group transactions they will not fall in the scope of VAT. Okay, so all the intra-group transaction will be eliminated. Like basically between the group members, there must be some sales and purchases, right?
Yeah.
Right? So
Mm-hmm.
although on sales you have to charge output VAT.
Yeah.
Purchases you have to pay input VAT, right?
Mm-hmm.
But if you have registered the whole group for VAT, so on your intra-group transactions, you will not charge any output VAT and you will not pay any input VAT. So that is
Mm-hmm.
one advantage. Okay, so all the intra-group transactions will be eliminated.
Okay.
Okay, then secondly, each company is not required to submit VAT return, but the whole group
Mm-hmm.
will only submit one VAT return. Like maybe possible that there is one parent company and five subsidiaries.
Yeah.
So now each and every company, they will not go and submit the VAT return. But for the whole group, you have to submit only one VAT return. Okay.
Mm. Ma'am, I have a question.
Yes.
What will we do if the case, in the case of liability, if they incur any liability, then every company, like every part of the group, will be liable for the liability they incurred, right?
Right. That will be a disadvantage. Okay. Because if there is any mistake, then the whole group will be liable.
Yeah.
So if you have to pay any penalties, then obviously the whole group will be liable.
Mm-hmm.
Now VAT groups, they are very flexible. Like let's say right now there are total of 10 companies. So at
Mm-hmm.
any time you can remove any company. There is no restriction. And if you
Okay.
want, you can even add few more companies in the group. That is also allowed. So
Okay.
VAT groups are very flexible. If you want, you can add more companies. And if you want, you can remove any of the company. So all of that
Okay.
is okay. Clear?
Okay.
So I've already discussed advantages and disadvantages.
Mm-hmm.
Okay, now next it says output VAT is normally based on price charged by supplier. Must deduct maximum discount except for early settlement or cash discount, as it would only be deducted if availed by the customers.
Mm-hmm.
Okay, now normally when we charge output VAT, so if there is any trade discount, like let's say for example, the selling price is 100 pound, okay, and you have given 20% trade discount. So you will minus the amount of discount, that will be 20. So
Okay.
you will be left with 80 pound.
Mm-hmm.
Okay, now let's say you're also giving some cash discount of 5% on early payments.
Mm-hmm.
But however, only 50 customers, they will be availing the cash discount. Okay, so you're offering how much cash discount? You're offering cash discount of 5% on early payments. However, only
Okay.
50 customers, they will avail the cash discount. So it means 2.5, there will be a discount of 2.5. So from this 80, I will minus cash discount of 2.5.
Okay.
So you will be left with 77.5 pound. So now output VAT will apply on this amount.
Okay.
Okay. So
Yeah.
that cash discount will only be deducted according to the number of people who are availing it. And trade discount will be deducted 100%. Okay, so trade discount will
Mm-hmm.
be deducted 100%, But cash discount will only be deducted according to the number of people who are availing it. So in my example, only 50% people were availing the cash discount, right? So that's why I
Yeah.
have 2.5. Okay,
Okay.
clear?
Yes, ma'am.
Okay. Then next it says goods for own use. Whether the trader withdraw goods from the business for own use. That and those are drawings. Right? So withdrawing the goods from the business for own use. So that
Mm-hmm.
is drawings. So output
Yeah.
value must be accounted for on the replacement value of the supplies. Okay. Now basically you purchase inventory with the intention of selling it, right? If you're purchasing it
Yeah.
for your business, so you have an intention of selling that inventory. So
Right.
basically I have purchased the inventory. Obviously on purchase you have paid some input back. So you
Mm-hmm.
have claimed all the input back that you have paid on purchases. Okay.
Mm-hmm.
So basically, I have claimed all the input back that I have paid on the purchases. But now, when I will sell the goods, so I have to charge output back from the final consumers, right?
Right.
Okay. But now, let's say today I have claimed all my input back, but later on I have used those goods for own use.
Mm-hmm.
So no sale is taking place, right? So if there is no
Yeah.
sale of goods, then output VAT will not be received.
Okay.
Today you have claimed the input from tax authorities and you
Mm-hmm.
promised then when I will sell the goods, so I will be charging output back from the customers. But later
Right.
you took those goods for personal use. So obviously
Okay.
sale is taking place, right? So if
Yeah.
sale is taking place, so output VAT will not be received. So now so in your VAT return, you showed that the output VAT is zero.
Okay.
In this situation, the tax authorities they will assume that you are the consumer and you have sold
Mm-hmm.
to yourself because you will
Yeah.
take the goods for own use, right? So they will assume
Yeah.
that you are the consumer and you have sold the goods to yourself. So now you will be
Okay.
trying to pay the output back from your own pocket, okay? And you
Okay.
output VAT at market value, okay?
Okay.
Okay, because if there was no shop, then in order to fulfill your demand, you would have purchased the goods from market at market price, right?
Right.
That would have been applied on the market price. Okay, so in this situation, HMRC they will assume that you are purchasing the goods from your own shop at market value. So therefore,
Okay.
that will be applied on market value.
Okay.
Okay.
Yes, ma'am.
Okay, now next one is gift. It says gift of inventory or non-current asset or gift for own use drawings are treated as taxable supply at a replacement value, except gift of goods to the same person which cost the trader £50 or less in a 12 months period. Business samples, regardless of the number of samples given to the recipient. Gift of services, whether to employees or customers, are not taxable supplies. Okay.
Mm-hmm.
So basically, if you have giving the gift like of fixed assets or inventory. So in this situation, um, yes, it will be treated as a taxable supply. Okay, basically the VAT will be paid by the owner on
Okay.
the gift of fixed asset or inventory because it is your business and you have some fixed asset in your business.
Yeah.
Now you're gifting those fixed asset or inventory to someone. So now VAT will be paid by the owner, because if I don't have those goods, then I will purchase them, right, at market value. So VAT
Mm-hmm.
will be paid at market value. So now that you are transferring these things from your own business, so tax authorities will assume that you have purchased a asset and then you have given that asset as a gift. Okay.
Okay.
So again, even in this case, output VAT will be paid at market value. Okay. But in case of gift,
Yes,
we have
ma'am.
few exceptions. Like it says, VAT will not be included on gift of business samples. Okay, so if you're giving
Okay.
business samples, so VAT will not be computed. Then
Okay.
if the gift amount is £50 or less than £50, so again no output VAT will be computed.
Okay.
And thirdly, if there is gift of services, so even in case of gift of services, VAT will not be computed. Okay.
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 Yes, ma'am.